Understanding when a hard inquiry actually hurts your credit is really confusing. And there's so much misinformation out there. And that's because, credit bureaus, you've done a pretty pitiful job at making it clear as to when a hard inquiry is going to hurt your credit. Let's start with the really easy one. Applying for a credit card is a hard inquiry. And if you do this and do anything else within a 90-day time frame, you're probably going to see about a 5 to 10 point reduction on your credit scores. There is no way to rate shop a credit card if you were doing hard hits. Now, stay tuned this week. We're going to talk about how you can rate shop for credit cards. But today, we are talking about mortgage inquiries and when that mortgage inquiry is going to hurt your credit score. If you have not had any credit card inquiries, you haven't shopped for any other types of credit recently, and you go to shop for a home mortgage, within a 45-day time frame, you can go out and shop for residential mortgages. By the way, when you pull a credit for a mortgage, that credit pull is different than the credit pull that you get for a credit card, and the credit bureaus recognize the difference. So if you're out there shopping for a home mortgage and a mortgage company pulls your credit here and a mortgage company pulls your credit there, those inquiries are all going to be considered one inquiry because you are rate shopping. The same thing goes for car shopping and even student loans. So installment debts where you are rate shopping to try to get a better rate. But remember, a credit card pull anytime around the time that you are starting to do home shopping or auto shopping is going to give a mixed signal, and it's going to look like you're shopping for multiple types of credit and therefore will lead to some points being reduced from your credit bureau. A couple of tips that I would give. 1, start with a soft pull. So work with a lender that has the ability to do a soft pull on your credit, which is not a ding. Tip 2, don't go and apply for credit cards, store cards, revolving debts, things that you get a credit limit and then you can spend and pay down, spend and pay down. And by the way, things like Care Credit, that is a revolving account. So don't apply for those if you can, if you are within 90 days of looking to get approved for a mortgage. 3, once you have shopped around with soft inquiries and you found the lender that you want to work with, then have them do the hard credit pull. Even if you have shopped for credit cards or autos in the past and it is going to ding your credit, one credit pull shouldn't ding your credit more than about 5 points, 10 if you've got really limited credit, but normally around 5 points. So even if you did have some credit card pulls or some other shopping that you've done recently, the one mortgage pull should not hurt. So shop with the soft inquiries, pick your lender, and then do your hard credit pull. These are great tips that you can put on your social media. Make sure that you go to Recharging with Champions, where you're going to find a script. If you don't know exactly what to say and you can't remember everything I just went over, don't worry. I've got a script that you can use or follow when you make your own video. But the idea is, let's create the narrative. Let's go out and make sure that our buyers and our sphere are informed. Check out rechargingwithchampions.com. Remember, if you are signing up in the first 3 months of its inception, it is completely free for life if you use the code word LEGACY. When you check out, you won't even have to put a credit card in. Check it out. You're going to find marketing calendars. You're going to find scripts, helpful tools, downloads, and we'll see you tomorrow.